The Bank of Korea has decided to hold its interest rate steady yet again at 3.5%, given economic uncertainties. The bank says, however, the key rate could go up later this year under certain circumstances. Our finance correspondent Shin Ha-young reports.
As widely expected, the Bank of Korea has announced another freeze, keeping its key interest rate at 3.5%. The decision was announced on Thursday following a Monetary Policy Committee meeting.
Inflation is slowing down, but considerable amount of time will be required for it to stabilize at the target level. Considering rising economic uncertainties and the need to closely monitor household debt, we have decided to keep our tightened monetary policy. The Board of Governors voted unanimously to maintain the current tightening stance.
This is the fifth consecutive time that the BOK has decided to keep the rate unchanged. The base rate has been held at 3.5% since February, following 10 consecutive rate hikes to tame inflation beginning in August 2021. The BOK's latest decision came amid concerns over rising economic woes in China with a deepening real estate crisis in the country. Due to these factors, an economic recovery for South Korea in the latter half of 2023, as initially anticipated by the government, has become more uncertain. The latest decision reflects the central bank's intention to monitor the situation rather than imposing a hike which could further weaken people's spending and investment. In fact, while the growth rate for the second quarter is higher than that of the first quarter, by sector, private consumption, exports, imports, investments, and even government spending have slowed down. Meanwhile, despite the economic slowdown in China as well as a decline in South Korea's exports, the BOK on Thursday maintained its economic growth outlook for this year at 1.4%, slightly below the forecasts from the Korea Development Institute and the OECD. Consumer price growth is expected to be at 3.5%. South Korea's consumer price index has been cooling down, recording the smallest increase in over 2 years in July.
Inflation rates could go up due to the rising crude oil prices during winter, and the rising exchange rate could lead to a jump in import prices.
Due to the BOK's latest decision, the rate gap between South Korea and the U.S. now stands at 2 percentage points. Despite the successive rate freezes, the Bank of Korea says it is focusing on the possibility of rate hikes instead of rate cuts due to the uncertainty over Fed monetary policy and rising household debt in South Korea. Shin Ha-young, Arirang News.